Are you ready to conquer the challenges of today's competitive real estate market? Whether you're a first time home buyer or bought and sold multiple homes, today's video is your guide to winning. Oh, we have some backlog going on. You guys hear that?
Mm-mm.
We have, hold on one second, guys. I'm not sure what's happening. Like, can you guys hear me? All right, perfect. One second. I hear a lot of back. All right, can you guys, Lourdes, can you hear me?
Yes, I can hear you fine.
All right, let me turn off my mic. Okay. So today we're going to be talking about those insider tips and strategies that we can use, that Lourdes and I use every day to help clients secure a home in today's crazy market. And that's why we use the thumbnail for as a clown, because it's just so crazy. So I'm David Piatek, and I have the pleasure of co-hosting with Lourdes Fernando. We're both Army veterans and industry experts that deal with the challenges that consumers face on a daily basis. So today we're going to cover 5 key concepts that's driving today's real estate market. So one of them is going to be a high interest rate environment. We're also going to be talking about low inventory coupled with high demand. We're going to talk about affordability, mortgage lending constraints, and the economic uncertainty is that ahead of us. Now, please ask questions throughout the presentation. We'll answer all of them, but this is kind of like a seminar format. So again, you guys have questions, please ask them and smash that like and subscribe button to get more content like this. So the first thing we're going to talk about is going to be rising interest rates and really, what we've seen over the last couple of years. Now, Loris, we've been in the business for a while. And back in 2020, 2021, when rates were 2.25, everybody was buying and selling. Like it was just madness. But since then, it's kind of calmed down because rates have gone up. That's why I think in today's market, when you're looking at becoming a homeowner, is that can you afford what you have today? Because I think if you wait, right, and tell me if I'm wrong, is that historically, the longer you wait, the higher the prices go up. So when people are like, I wish I would have bought X, that's what happens. So, yeah.
Yeah, definitely something I see also is when the interest rates are really low, it's very competitive, and then you do have to bring sometimes a little bit more money to the table, which there's appraisal gaps, there's like all these things that you have to do that it just really makes it, you know, less not less appealing, but sometimes even unachievable for most people. So that's another thing. And also since 2020, the homes have gone up, substantially in some areas more than others. And then in just a few areas, we've seen just a small little downtick. But yeah, the rates have still gone up. Have you seen that? Have you seen that, David?
Yeah. So you see, like, because like back in December, rates were in the five. And so when you think about, you know, the 5% mark, like that's really doable. Even then, at that point, we're like, does it make sense to get an assumption, couple that with the second mortgage? But we've seen really rates hover like in the upper sixes right now. But like that's the thing that people have to understand is that you definitely have an opportunity if you buy a home today to be able to refinance later and take advantage of those lower interest rates. So a lot of people that were buying homes or that bought homes 5, 8, 5, 7 years ago, all those people took advantage of the low interest rates when they became available. So remember, not everyone that just bought a home back in
Mhm.
2020, 21 had just bought at that time. They've already owned homes, so they reaped the benefits of home ownership.
Right.
So
Yeah.
yeah.
Yeah. So understanding, I guess, your whole situation, and and timing the market perfectly. I think that's going to be key. So when you're looking at it, the interest rates do have a big impact on one, the inventory that's out there in the market right now, and then also like last year, we were able to get a lot of, especially for our buyers, we were able to get concessions. It was a lot easier to move around and less competition. January, we did see a small, it went down to the 6%. We saw interest rates go down to the 6% January, February. And then we saw a ton of buyers like coming out. They were just running out the door. And then that's where we got stuck with this multiple offers, which we're still seeing a little bit today, but not as crazy as it was in 2020.
Yeah, and that's the thing I think right now, when you're thinking about moving, you're just kind of thinking, a lot of people are thinking right now, right? Kids are out of school, you're maybe relocating to another school district. How do you really do that, right? And right now is kind of the time. So there's like a 4-month window where we're going to see an increase. But I know that mortgage applications have been down. I know inventory is still down because, people are, I just read an article is like, we have this hemorrhaging, but we're going to talk about that next, right? That's going to be the low inventory, high demand piece to it. But yeah, there's just a lot of unpredictable things that are happening. And do I think rates will go down at some point soon? I think so, because it's cyclical, right? They don't always just stay high. They
Mhm.
just kind of fluctuate. And right now we're kind of at that high end, which eventually it's going to taper off. But I know, Lourdes, you're an expert when it comes to the time. Well, I think it's tough to be timed the market perfectly, because we would have all bought like 50 homes back when rates were two and a quarter.
Mhm, I did.
um, and some people did, right, buy a lot of properties because rates were it. But like, how do you, how do you time that? Like, is it individual when you're trying to time the market, like when you
Yeah.
actually should buy?
Yeah, so I think it's all case by case. One thing that you should buy if you can afford it, because I do see a lot of people going into situations and they, it's just it's less ideal. Like they'll go into a situation, not have enough money for repairs, not have enough. So I think overall looking at your budget is, with these interest rates, would this make sense for you? And if it does, then it would be a great time to buy. And a lot of people are holding off sometimes, just because, oh, the interest rates are really high. But then let's look at it the other way. When the interest rates go really low, are you going to be able to do these appraisal gap waivers? Are you going to be able to do all these things? Is that going to be most beneficial for you to wait? So every situation will be different, but understanding your budget, and I think we're going to go into that a little bit later, is probably one of the biggest things. And if it makes sense, then I would definitely make that move. And then
That's
also
awesome.
looking at like what's happening with the, any type of economic indicators is something that you also should put like at the forefront and say like, okay, what's going on in the economy? Is it going to be a good time? I am seeing like articles coming out now that some areas are going down in valuation, that they're hitting bubbles, that they're this and the other. And it's very important to pay attention to those things, because that's going to be huge. It's going to be huge. We haven't really seen that in the Chicagoland area, but I know other areas are starting to see a slight bubble.
Yeah, and that's why I think it's important, from that budget perspective. I've gotten a lot of questions around, should I get a fixed rate mortgage or should I be looking at
Mhm.
adjustable rate mortgages? Now, sometimes that they dangle that fancy carrot. They're like, oh, the rate's just a little bit lower than an adjustable rate
Yeah.
mortgage. But one thing I think from a time like payment perspective and knowing what your payment's going to be is important. So if you can afford that fixed rate payment and you can afford those 30 years of payments, that's great. Now, most people move every 7 years. Now that's data prior to COVID. Okay. So definitely things have probably changed in that piece of how long that year is going to be. But like Lourdes mentioned, it's those economic indicators that you need to keep your eye out for. And but at the end of the day, right, no matter how you look at it, you need a place to live, right?
Mhm.
Either you're renting, you're buying, or if you have the pleasure of living in an RV. But most people in the country are living in a renting or buying. So um Laura, somebody asked a question about, you mentioned there was an article outlet. How do you get reputable information like that? What sites do you use?
Yeah, so I just saw that I was on Google, so it's like the Google News. I have it in my algorithm, so anytime I see those, I click on it. Sometimes they're, and I look at the articles and I look to see if there's, if it's a good indication, like in my area, because I always want to see any type of news that's out there. Is it going to affect, my clients and the area that I live in? But Chicago's never on that list right now, and there's some that went really 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 high, and I can't recall off of the top of my head, but I did I do have that on my algorithm with Google, so I do look at the articles that come out. So the best way to actually do that is to contact a local real estate agent in your area. We do have some connections for agents all over the United States, and they can give you the actual numbers of what's happening. So if you do need some specific data, because it's different from all over the United States, and it's market specific. It's not specific to one area.
Right. Yeah. Now I'll go to like the National Association of Realtors. They got news, and I go to some of like the major, um, like the major real estate companies to see like what's trending. Because sometimes, like you said, Loris, is like every area is different. So that kind of leads us into our second part, which is a low inventory coupled with a high demand, and it's a recipe really for driving prices up.
Yeah.
I think that's the real challenge is that when just like anything in life, when you want something but there's not much of it, you're going to pay more because you want to be the owner of that thing. Now imagine having a lots of things, but this one is exactly what you've been dreaming of, but you didn't know that you were dreaming of it. That's real estate in a nutshell. Right, Lourdes? I mean, like, you know I think it's tough because it's like, there may be not a lot of, competition, but like, you walk me through that.
Whoo, in a nutshell. Okay, so yeah, when they're, I mean, just think about it. Like, there's not enough homes. There's not a lot of people selling their homes, and why aren't people selling their homes? Because the interest rates are high. So typically, they'll sell a home, their starter homes, and get a bigger home. But with the interest rates being this high, it can be a bit challenging. And some say, "Hey, my mortgage, I'll never be able to find a mortgage like this, so we're going to stay put until it goes down." So those that will what we have on the inventory right now is those people that really need to sell. So those really need to sell. But even I'm going into properties and they're not the best quality properties sometimes, and then you have a lot of people coming and doing, submitting offers on the table pretty much. Um, so less homes is more competition if there's the buyers out there. So it just kind of, I was talking to one of my clients, they're like, man, there's not a lot of good inventory out there right now. I'm like, yeah, it's kind of the market. So we're just kind of like slim pickings at that point. Do you see um what are you seeing out there, David?
Yeah, I'm really seeing the same thing, and I think, yeah, people don't want to get rid of those low payments, but the reality is that was kind of like a fairyland kind of period, right? Most people at some point are going to refi, or not refi, but they're going to sell those homes, or they might pass them on to their kids. Who knows, right? But well, let's say if you're using a VA loan, you can actually use the equity in that property as a down payment for the next one with a home equity line of credit. Now, I know we've talked about
Mhm.
that before, and we have videos on that on the channel, but there's definitely some tools that exist that you can still be able to leverage that. Or, people are opting to do renovations to a property. But again, that's where you might be able to get a better deal on a property, like I did when I purchased my property. I didn't pay top of the market, but I was able to get a really good per square foot deal, and then just do the
Yeah.
renovation work myself. And you get to kind of customize it to what you want it to be, right?
Right. Mhm.
Yeah. So, and that's the thing. Like, it's challenge because if you're renting a place now and you have kids that go to a certain school district, how long do you really want to wait to purchase a place, and what if opportunities come up somewhere else, right?
Yeah.
So like I talk to people all the time. It's like kind of actually I'm a good example of that. I woke up and bought a house. I wasn't planning on being where I'm at. I kind of woke up and I was like, oh, there's this place for sale. It fits what we're looking for. Let's go look at it. And we got it that same day. Like so, and I do this every day, and I'm against say doing that, but it worked out at the end for us. But yeah, it just kind of, you got to weigh all of that. But what are some tactics that you use for negotiating when it comes to like making offers that are out that make it look outstanding?
Yeah, so it just depends on the client. So if we're servicing a VA home loan, then we definitely highlight all the benefits of a VA home loan. It's the education that we're giving over to the seller or the seller's agent. We and then sometimes it's not always about the price. It can always, or not always about the price, but it can also be about the terms. So don't underestimate the terms. One thing that we like to do is call the agent and ask them what's most important to your seller. So if they're currently there, living there, is it a quick close with a post possession type of thing? Is it, the appraisal gap waiver? Like, what is the most important thing to your seller? So, or to, to the seller when representing the buyers. So just really understanding what that is. And then, and I know I just said this, but really, really knowing the VA loan or whatever loan product you have is probably is key. I have a lot of misconceptions. They say, "Oh, I've never done a VA home loan. I don't know the process." And I tell them, "Hey, I'll educate you throughout the way. Like it's so simple. Oh, this is a as is sell. What happens if something comes back on the appraisal? I already talked to my client about this. They have money to escrow. They'll fix it after closing. We don't have to worry about it. We just need to get a quote, escrow, and we're done." So just combating all of the misconceptions that they have is something that we do when we're submitting the offer, just to make it a little bit more appealing. And then also our experience, we relay our experience on the table, and we say, this is our experience, this is what we have done, and this is how we work through the process. So just knowing that they're dealing with an experienced team that is going to be walking their clients through the entire process is very different from, just a standard person. So just making sure that they understand all those things have been able to win us offers over others.
Yeah, I think definitely that's kind of like the key standout, right? You had a couple good takeaways, Loris. One, agent calling the other agent and asking them what are they looking for, right? The other piece is when you're making the offer, understanding how the actual product works, and when things don't go according to plan, what are the options that are available, right? Because that's being in this business. I think you're like almost half therapist and half like you have to be know all the solution transaction, because no matter who's watching this, every transaction goes wrong. No matter how perfect a transaction may seem, there will
Mhm.
always be a hiccup where you're like, okay, now this thing may not be a viable deal anymore. And again, it happens more often than you would think on that piece, which kind of brings me to that second piece of, hey, negotiating. You can do all the negotiating in the world, but if you're not properly pre-approved for a
Oh,
mortgage, you're going to get denied a week before closing. And I know, Lourdes, you have a lot of experience with that because you call me and I'm like, more often than you should, but I like it when you do call. Okay.
more often than they should.
More often than you should. But we do these online, so we have people reach out to us all the time. They're like, "Hey, my lender denied me. I was, I'm a week from closing, or it's a condo situation with a veteran." And so this is why it's so important that when you're going through that pre-approval process, that you're submitting all your documents, everything's being reviewed, and most people are going to say they're experts just because they want your business. Like, we for reals experts. Like, this is what we do day in day out. Always bringing solutions to the table. And you want to ask things like, hey, does my lender allow escrow holdbacks? Are they factoring in residual income, or are they looking at debt to income ratios? Right, that's what the channel's all about, educating you.
Condos,
So you the what?
condos.
Yeah, any condo could be approved with a VA loan. We just had a closing Friday. Everybody said you couldn't do it. Agents, the agents, lenders, they were like, it's impossible. You guys are wasting your time. And it closed.
And closed.
And it closed. Yep. So just be really careful with that. Don't get misled. You guys can always reach out to us for like a piggyback, what kind of piggybacking option for you guys. There's no cost to doing it. You guys could schedule a call with us in the description. But we could always just walk you through what you're going through to help, take that peace of mind, give you some rest when it comes to that. Now, Lourdes, what's up with I wanted to ask you because I know realtors could search the MLS for different properties, but how do people get access to off market, or what is off market properties?
Yeah, so off-market properties mean it's not listed on the MLS, which all the agents have, which correlate all the way down to the Zillows, the Redfins, and stuff like that. So off-market properties just means it's like an exclusive list, and usually agents have those. They like, for example, we went to go look at a property, and we could not access this property. It was a multi-unit, and I saw across the street there was people working on this property. So we literally went and knocked on the door, got a tour. I said, "Hey, are you guys selling?" They said, "Yeah." I said, we're buying." So we went over there. We walked the entire property, and we just closed on it last week. And it was an off-market property. The seller didn't want to have an agent representing him. I wasn't doing dual agent. I just represented my buyer, and we went all the way to the closing table, and it was pretty awesome. And it was a beautiful house that my client didn't have to get any type of competition with. He was the only offer, so there's no multiple offers. He didn't have to compromise anything, and he absolutely loves his place, and it's a 2-unit.
Oh, that's
So
awesome.
a lot better than what we would have. One, no competition. Two, just a very easy process. So yeah, so it was great. It appraised, no problem. And I met the appraiser there because he didn't have an appraiser or a listing agent or anything like that. So I met the appraiser there and gave him the comps and did everything as I would do as if it was my own listing, but just so that we wouldn't have any just so we wouldn't have any issues during that time. So,
Awesome. Well,
so yeah.
thank you for that, Lourdes. We have a question on here. Is your company a one-stop shop for buying a home? I've watched your vids for a while and still not sure what stage to contact you. So that's a good question. So I would definitely contact us as the earlier, the better, at least to get a consultation, right? We can walk you through a lending process. Lourdes can connect you with somebody in real estate, but it's not too early to be able to connect. Just because then at least we can go through the options that you have, right? Sometimes people think, and that's actually something that we're not going to cover, but I'm glad that you brought that up, is at what stage do you contact somebody if you're interested in buying a property? The thing when it comes to home ownership, it's not like I mentioned, like I woke up and we bought a house, right? It's rare, but for me, I'm in the business, right? But for most people, even Lourdes, when you were looking to buy a home, it took what, 2.5 or 2 or 3 years? How long did it take?
3 years.
Years, right? 3 years of planning ahead of time to make sure that she can do what she wanted to do. And normally I tell people is like, if you're a year out from buying is when you want to start the pre-approval process, because it allows you to know that what you want to do is doable, right? Not someone calls and says, I want to buy a house. I found the house. I want to buy it today. And then we find out that they can't afford it or they're not qualified to do that. But if they had some extra time, they could have saved some extra money. They could have been in a lot better position. So the further out, the better. Now, if it's like 10 years from now, okay, that's a little different story. But, if like, let's say you're self-employed, you should be doing it 3 years out because you need 3 years of planning. Okay. Lourdes, right? But
Yeah,
Lourdes did that. And
that's why I did that.
everything that you have today is because you planned ahead, right? That's what changed. Like that changed your life. So,
Yeah, and I just wanted to add, yeah, the only reason it took me that amount of time is because I was 1099 employee. I needed a show, so what I did is I worked with David just to get in a financial position, so I knew exactly what to do, the roadmap that I needed to take to get to where I wanted. So I was like, okay, I need to make this amount of income. He looked at my taxes. before I submitted them every single year. You looked at, even when I was making big purchases, like I had to buy a car. I made sure that, I didn't get the car that I wanted, but I got the you're laughing because I really wanted a different car, but it's fine. I got the car that fit my goals and like what I was trying to achieve and accomplish. So just being able to have like not a financial advisor, but a David on my side where I was like, okay, like I'm not going to do this, although I want to. And, right after we closed, I can do whatever I want. And I was very specific. I wanted a 4 unit. I wanted an investment property. And then I had to save money for, my residuals. So there was like so much that I had to do to accomplish my dream. I think this was like a 10-year dream of mine that I was able to accomplish because I really got into the position where I needed to. So yeah, definitely reach out and then get that roadmap and then at least give you the time frame of like what you're trying to accomplish and even having that strategy call of knowing, say, okay, this is what I'm trying to do and this is, I'm going to go from there. But yeah.
That's awesome, Lourdes. Thank you for that. Which kind of leads us kind of into that next piece, right? You can't control prices. So getting qualified early on also lets you know what adjustments can be made in the market for you still to be able to qualify. Like, because sometimes I think, I look at people at finances all the time, and most people can be homeowners, but they don't budget
Oh,
correctly. Okay. So when someone's like, I can't afford, which is what we're talking right now, right? The affordability crisis for most people, when I'm like, oh, you actually qualify for this payment, or hey, if we eliminate just these two debts, you can actually be a homeowner. It kind of hurts because I'm like, you were this close, but maybe didn't think of or plan ahead of time. Because sometimes life comes up and you're like, hey, I'm going to be going, I want to purchase a property now, whatever the case may be. But let's go through a couple of these affordability points that we want to touch on. One, home prices have gone up over the last couple of years, pretty significant, right? When COVID first hit, I was thinking like, man, I'm going to be out of a job. I remember I was talking with my dad. I'm like, everything is shutting down, nothing's going to be open. And then like the whole world changed, right? Prices just infinite. This seems like the infinity went up. And then, now we coupled that with the housing prices, which to
mhm.
some makes it less attractive. Now, I think it's true depending on where you're at. Lourdes, right? Tell me if I'm wrong here. If I have to buy a house and it costs me 9,000 a month versus renting at 2,000 a month, it's kind of tough. When you're in areas where it's not that much of a discrepancy, well, homeownership is more attainable.
Mhm.
What's your piece on that?
Yeah, one thing that I have seen, like, the houses have gone up obviously with these interest rates. Um, but the wages really haven't gone up that much.
Right.
So that's probably like one of the things, like our wages. I mean, we've seen very, very little increase in that. And then everything else, like, to maintain the home, cost of goods, food. I just spent $100. Got like a few things at the grocery. I'm like, what is this $100? Like, I don't understand. It's cheaper if I go eat McDonald's every day, but I'm not going to do that because my health will suffer. But yeah, and there's all these like really like expensive. Like even maintaining homes have gone up. I remember when I first moved into my property, tuck pointing was, X amount of dollars, and now it's 3 times as much. So that has also gone up as well. So have you seen any like increase in like cost of living or anything like that, David?
Yeah, to your point with some of this like maintenance related cost of living. I mean, not cost of living, but like it's getting more expensive for sure when you go to grocery stores. Gas is more expensive, but also services like maintenance have gone up a lot. Now, I want to be honest here. I think that some of this stuff people are just riding the wave just because it's more expensive because my dad, like for example, my dad's got a background in construction, and I used to talk to a buddy that's a landscaper from my unit, and I was explaining the job that we have, and we got quoted like $20,000 for this job for like landscaping piece. Okay, he came back and said 20 grand. That's about a $5,000 job. And I see that more often than not when I'm talking with clients. They're like, oh, I'm getting a renovation in my bathroom. It costs $25,000. I'm like, what? Like, yeah, maybe about 10 grand, like for a nice one, right? But like, get some friends in construction. That's my bottom line, because you're not going to get taken advantage of.
Get
And
your
I think
team.
that's what people just take advantage of, what the current situation is. You can definitely cut costs down. I think that's the number one thing for people to do, is just be money smart. So where you're spending that money, because in some places that I still go to, like, I'm not even joking. I'm Polish. I go to a Polish deli in Chicago every time. Prices haven't gone up. It's been like 6 years. It's the same prices. So it's kind of like, I think just certain places just take advantage of that.
Yeah, and definitely get your quotes, and then ask. I had one of my
Right.
clients that recently closed, and they quoted her $22,000 for all this work, and then she went and she started hiring her own people, and now she's, I think, probably like at 7,000 or 8,000 compared to 20, like
Right.
$20,000, and that's huge. So yeah, definitely doing your research there. One thing that's also changed, David, maybe you can help me out with this one, is the student loans. Like for the past couple of years, they were deferred, so you didn't have to count them. Like, can you go a little
Mm.
bit in that, because that also is affecting individuals' qualifications now. Now that
Oh,
they have to pay their student loans back. Do you have any insight on that?
yeah, for sure. So this is kind of like the dilemma that people face. So now this changes based on the loan product. Okay.
Mm.
If you are in a repayment plan, a lot of times what we'll see people is they'll go down an income driven. Like if you're completely deferred on your student loans, lenders will just use like a certain percentage of that to qualify you for a monthly payment, which normally disqualifies people because, like on VA loans aren't that bad. It's like 5% of the balance divided by 12. Sometimes they'll be like, oh, it's just 1% of a balance. But student loans, I mean, I've seen them as high as 600,000 in student loans. So,
Mm.
yeah, it's just kind of crazy. Lourdes, can you hear a baby in the background?
No baby in the background.
No, I don't have one here. I just hear some crying in the background. I was wondering if you can hear it. But the thing is that if you are in a repayment plan, hopefully you're in a like an income driven plan, and normally payments will be much lower. But if you're completely deferred, it hurts you the most because the payments will be the biggest. If
Mhm.
you're in a like regular student loan, they can be high and that can disqualify you. Because I did the I'm trying, I don't know, but I did the math before. Like it's about $750 a month in debt, right? Like actual monthly payments equates to about 100,000 in purchasing power. So if you have $1,000 mortgage payment, you're taking about $130,000 away from purchasing power. So it's pretty significant. It's like people with car loans, where I'm like, your car loan is, $1,000 a month. You know, does it make sense to have that? Well, it depends on your income, right? All that's going to be driven by that. So either you learn how to save more or make more. That's
Right.
like yeah, that's the options, right? Um, and that's the thing too. It's like we come across, and that's why it was so important to look ahead of time, right? That's why you want to look at your financial picture ahead of time, because we might look at it and go, well, the payments are not where they need to be. Can you contact the student company to be able to put you in an income driven payment plan? Now your payments drop, you're able to save more. Just because you're still going to have struggles of saving money, right? You still have to save money for closing costs. As amazing as we are, we do a lot of deals where we get seller credits, but that's not always the case. And as the market shifts, it becomes harder and harder to do that. So,
Right.
yeah.
Yeah. And then, David, do you have any? Um, I know, like down payment, like that's also been like another topic. Do you have any insight on the down payments, like saving up for? Because I know that's been very hard, especially with all the high cost items that we're dealing
Yeah.
with.
Yeah, I mean, I think this is like a couple part conversation. I'll kind of combine it into one. You have the struggle of saving money for a down payment or closing costs. So if you're using a V loan, obviously no money, but still you have closing costs. There's programs that are out there like government programs and community resources that give you down payment assistance. Now, some programs, and I've talked about this before, they can be great, and some of them not so great because they really are like legal prepayment penalties. So if you refinance out of those or rates drop and you want to refinance, all of a sudden you're paying that extra money back, which maybe should you have done that in the first place? For the most part, it's again, depending on how much money you make, your debt to income ratio, all of that could be factored into these programs. That's why normally we'll see, like, if let's say if you're in Chicago, you have the IDA program, the Illinois Department of Housing. What does the IDA stand for? Illinois Department of Housing Authority, right? So basically, they'll offer programs for like VA loans, FHA loans, conventional loans. If you meet a certain criteria for income, credit score, debt to income ratio, then you're able to take advantage of these programs as well. But just know the details before you go into these projects, these programs. Now let's shift gears and go into mortgage lending constraints, because every time I talk to someone, they say, well, the housing market's going to crash, and I'm thinking to myself, not right now, right? I think 2008, uh, the lending industry learns from its mistakes, right? We're giving like stated income, stated asset loans, no income, no asset loans. You put your name down to give you a mortgage for $1 million. How was that possible, right? So the lending industry overall has gotten much stricter. That's why, to allude to the pre-approval process, if you are unhappy with the amount of paperwork you have to submit, that is a good sign. That means you should be happy. Like, okay, I actually got a pre-approval. If you're just telling someone how much you make and you're like, that was really easy, and they'll be like, oh, then you have run into problems. I'm sure, Lourdes, clients have complained to you about me. Be like, why does he ask for so much? My other lender didn't ask for that. We get it all the time, and there's a reason behind that. It's because you want to ensure that everything is done, because lending requirements are much stricter now. So, and still, you're like, you have to still have to provide a bunch of stuff.
Right. Yeah, and it's more important to have all that stuff because they're going to have to give it to you anyways. And then when the reason I give you so many calls, David, is because a lot of lenders do not ask for all that documentation up front. They say, oh yeah, based on what you told me, we're going to give you the pre-approval. And then we have to jump through hoops because now their DTI is too high, their debt to income's too high. They don't fully qualify. So going back to, like, planning this out, this is like a big move, and we just want to make sure that you're actually qualified. So if they're not asking you for much, or just saying like, yeah, you're pre-approved based on, this little survey that you filled out or this little questionnaire that you filled out, you're good to go. Here's your pre-approval. Go have fun. Shopping for houses, you get to that point. Now you're in $1,000 out of your own money, plus the earnest money, plus all this stuff. And unfortunately, you're not, you can't purchase, or you have to wait, or, you just lost all that stuff. So yeah, that's very important.
Yeah, we've seen it too many times when that's happened. And one thing I always tell people is you're never pre-approved for a purchase price. Get that out of your mind, right? You're always pre-approved for a mortgage payment. That payment correlates to a property, because if one property may be in a flood zone, maybe have higher taxes, and let's say those taxes and flood insurance is an extra $500 a month. Well, that's going to reduce your pre-approval by about 80 grand. So this is why you have to understand, especially with condos, or you're looking in like completely different areas, it's the payment that you're pre-approved for. And the reason I say that is, Laura said debt to income ratio. VA loans look at both debt to income ratio, but you must meet residual income, right? So you must meet residual income, and sometimes there's a debt to income overlay. That gets somewhat complicated. And that's like an hour-long discussion to explain it. But just so you know, there's different ways that lenders will look at this. And one of the biggest factors for qualification is credit, and that's the best way to get affordable, um, get affordability for having the lowest term. Now, if you're using like the big veteran banks that advertise to you daily, just remember you pay for that. So no matter how good your credit is, you're just getting taken to the cleaners every single day. There's over 4,000 veterans that spend over 32 million in junk fees every month because they like a certain company's marketing. Now, Lourdes, do you want to talk about some of the I guess one thing that veterans kind of get bashed on the most on VA loans is the appraisal, because I hear it all the time. What's your take on the VA appraisal?
Oh man, I get this. This is probably the number one objection that I get, is the VA appraiser, that there's just these that that's pretty much the only appraisal that they do. But it's the same appraiser. The VA appraiser is the same as a FHA, same as a conventional. They all use the same criteria. The only thing that's different is they want to make sure that it's safe and habitable. So they want to make sure that there's handrails, no peeling paint, no broken windows, things like that. Now the VA is very they recognize that. And if somebody's like, I'm okay, I'll paint it after I close. I just want to close on this property. How am I going to compete with the conventional offer? So now what you can do is even escrow money. Say the repair is $1,000 to fix peeling paint and a handrail. It's $1,000 to do that. You go get a quote from a contractor. You submit the quote over, and then all what you have to do is escrow that money. If you don't fix that repair, then the lender takes that money and they fix the problem for you. So that you can actually close on the transaction, even if it's as is. The seller doesn't have to fix it, which is great. You can't do that with the FHA loan. And another really good thing with VA home loans is you can even do, when they call Tidewater, you can even present comparables that are what you saw when you ran your numbers and what the listing agent saw when they ran the numbers to list the property. So they can do that. You can even fight the valuation. It's not easy, but you can. And if you do have some substantial evidence, I know we won a few appraisals that we won, and we're seeing that a lot right now when we did have a little bit of a slowdown. And then when the interest rates went low at the beginning of the year, now, we're having all these like higher offers and multiple offers, everything like that. So we're starting to see that come back. We're starting to see a lot more appraisal issues come back. But the VA loan is a very good it's a very good loan product. And I just think that the education that the listing agents don't have is it's a good opportunity for us to explain that over to them. And that's something that we do on a daily basis.
Yeah, that's the thing. Like, if you're getting steered away from using your benefits, run for the hills, because normally there's a solution in there. I mean, like, unless you're trying to straight up buy a house that's falling apart. Okay, you're gonna run into some issues, right? Are we tight on funds? Okay, there could be some reasons, but just be realistic with that. And you always have us as a sounding board. One thing I want to talk about that I think there's a lot of confusion around too when it comes to lending is when to lock an interest rate and when rates are locked. So normally, right, across the board, an interest rate's going to be locked once you go under contract on a property. You're not going to be waiting, like, I guess you could wait after you've went under contract, disclosed the loan, and let it float. But most lenders should be able to do a float down for you, meaning like market rates improve. It's a week before closing. They can actually give you a lower interest rate. You hedge yourself if you lock the rate. When you do a pre-approval, the rate is not locked. Now, in theory, you could do what's called a lock and shop. Most companies have gotten rid of those. That's where you can lock a rate today and it's good for like 120 days. You pay a fee, it's non refundable. So there's just not, they're like, most of the time, it's better to just go with whatever the market's at. And right now, since it's an election year, I have a sneaky feeling that they're going to artificially drop rates anyways. So just kind of keep that in mind.
Mhm.
So,
Yeah, and one thing I know we probably didn't mention that I would like to say is building a strong relationship with your lenders. I think that that's very important because when at the final hour or your multiple offer situation, you need your lender to go in there and call or send an email to the listing agent just to say, "Hey, this buyer is good. We're going to go to the closing table." I think that that's very important. It definitely sets aside as far as like being more competitive than others because a lot of lenders don't do that. They won't call, and it makes all the difference in the world. I had a listing, and the only lender that contacted me was the one, not the one that that was the strongest offer too, but it solidified that they already have everything they need. They just need the appraisal. They were under contract with another property that didn't go through. So I know that this is the strongest buyer and we're not going to have any issues coming up. So um, building those relationships with the lenders and just really knowing, you know, I guess having that. David, I know there's a lot of stuff that you do, but do you have anything to say about that?
yeah, for sure, Lourdes. You can interview people. Okay, I think sometimes people think like, "Oh, I'm working with this company. They're the VA. VA doesn't do mortgages, people. Right? They don't do mortgages. Right? Companies misrepresent themselves all the time. Number one, you're like checking your pulse. Is like he's right. The thing is that you can ask them what their communication style is. Right? I always tell people I'm like 7-Eleven, always open but not always doing business. If something comes up, shoot me a text message. If it's the weekend, I always get back to you because like that's when you're looking at homes in the evening. Like when we get off the thing, I'll have missed calls, return calls to people. On the weekends, when you're looking at places, that's when you need somebody at the most. Big institutions won't do anything. And like you mentioned, Loris, you had a bunch of offers and only like one person called you. And like that's only us when we're making offers. That's what
And it was on the
wins.
weekend.
Oh, was the weekend?
It
It
was on the
was?
weekend. Yep.
Yeah.
Mhm.
Yeah. And that's the way you win deals. It's like you have to know your left and right limits as far as how much money you have and what things you control in the contract. That's super important,
Right.
right? Like you go over that with people, right? Yeah, like what are you going to waive, what are you not going to waive? How much money do you have for repairs? Do you have money to do a down payment? Doesn't really make, I mean, it can make sense on a V loan if you're paying like a 3.15% funding fee. So a lot of times actually right now, second time use VA loans, almost everybody I'm currently working with is putting 5% down on a VA loan.
Wow.
Yep. Because they increase the funding fee for second time use because they expect you to have money the second time around. Yeah.
And usually
So
it's a more expensive property, and then it's
right.
kind of like, yeah.
It's a more expensive property. The funding fee is just insane. I mean, look, you buy a $500,000 property, the funding fee is already at like 17,000. Right? That's why they want you to do a 5% down, have less. Now, that's also why it's important to get your VA disability compensation. I do a bunch of videos with other collaborators on YouTube around that. So that's
Mhm.
just something definitely you guys should take a look at if you haven't started that process. I know when we talked a while ago, yeah, just everyone's a different.
We talked a
Please,
while ago.
yeah,
Yeah, I
just
kept
please,
saying, "David, you need to get yours, your VA
right,
disability
right.
rating." But
Yeah.
glad you
So,
finally
but
got it.
again, it takes planning and it takes time. Last thing we're going to really cover is going to be some economic uncertainty. So, we're just going to kind of skim through, when you watch the news, right? Why all of a sudden that shift in news has a huge impact on rates. So, a lot of times things will trend for a little bit, and then they kind of fall off, and rates will drop down, and they just kind of go up and down. And we see this month in, month out right now. So one of the big things that comes out is job reports, right? As unemployment lower or higher than they anticipated, that's going to have a big impact on what investors think is going to happen with the housing market. Right now, it definitely seems like it's doom and gloom, but still, there's tons of people that are purchasing properties. So, yeah.
Yeah, some of the things too. Inflation plays a huge role. We've been seeing, as they talk about on the news. Oh, inflation went down, and then they'll interest rates go down, and then it starts. This crazy multiple offer thing happens, and then they go back up with the interest rates. And oh, by the way, inflation is like
Just
we
kidding.
just kidding. So there's a huge correlation with that. And then there's even a correlation between the stock market too. And you can also see like how inflation's affecting the stock market, how it's affecting the interest rates. And I know there's some like remote work trends. David, do you have anything about that? That's
Yeah,
also a big factor.
it is. I mean, it affects. Well, you have work trends, and you also have retirement. Retirement, that's really screwing prices up, to be honest, because
Yeah.
you go to some places where home values are so high that the local economy does not support it at all. Like at all, right? So locals can't even become homeowners. And
Yeah.
then having the ability to work anywhere, people are going to places like Florida where it's warmer, and again, price values keep driving up. That flexibility keeps driving price up,
Yeah.
which I think is, like you should be able to, work where you want to. That's why we're not going to see a shift today in housing. We're going to see a shift in 20 to 30 years.
Yeah.
Yeah. So, but for right now, it's going to be kind
Very
of
good.
is what it is.
Yeah,
That's
and then another thing that also is affecting a lot is the government policies. There's a ton of like changes between housing policies. There's taxes, which is huge. There was an article that like taxes here in like Illinois, like they are really really high, and I'm looking at these and they go up. Like some places saw like a 200% increase in taxes every 3 years. It gets reassessed, and it's like they're not changing how much they are, and all these valuations of the homes have gone up, and then they're not really changing like the tax rates per city, per county. So that's like huge that people are paying so much more in taxes. It's unreal what they're doing. Um, with that, so that's huge, and that plays a big role. I was talking to one of my friends, and he's a disabled veteran, so he doesn't pay property taxes, but he says so many of my neighbors are selling their houses because they can't afford the taxes anymore. They're getting hit with $12,000 taxes. My other neighbor has $24,000 in taxes. Like, how is someone supposed to afford that? And it's and their houses are sitting on the market for a very long time because not a lot of people can. So that's just something that I'm hope that they have a really good solution for in the near future, because it's bringing the valuations of the properties down, and then also it's really hard for people to pay. People are losing their houses over this. They're going into foreclosure, and the taxes are the ones that are because of taxes. So that's that, and then. Another thing that I want to mention is also financial planning. Just want to jump to that really quickly because I think that's very important. Is for you to really, I quickly shared that it took me 3 years to get where I wanted to be because I was very specific with my goals, and financial planning was something that I had to really sit down and say like, okay, what is a roadmap that I need to take to get to where I want to go. So that is very important, and I did have to consider all these outside factors too. I didn't know that the interest rates were going to be as low as they were when I purchased, but they were really high, and not really high, but they were like 5 6s when I came up with this plan of like, I want a multi-unit. This is what I want to buy. How do I get it? And I was already planning for this. Just so happened when I was ready, the interest rates were at 2.75, and I was able to go way above. Like, I think like when I told Dave, I was like, I'm approved for what? Like, you got to be kidding me. And it was
I
because, yeah,
remember that.
Yeah, I was like, I sent up a list. I was like, "I qualify for this?" He was and I was like, "I'm not gonna qualify, but I'm just gonna double check." And he was like, "Yep," because the taxes were low. He was like, at that time, he was like, "Taxes are low. You're good to go. Let's go. Here's your pre-approval." And I damn near cried. I was like, "No way!" Like, and it was like just such a great experience because it took me 3 years to achieve this, and I was very diligent. I think I worked before I purchased. I was like working 400 something plus days without a day off. Like I was like super. Like I paid off $75,000 worth of household debt. It was crazy. I was saving every single penny, and it was COVID, so we couldn't go out or do anything. So I was just working. So it was a lot of sacrifice to get where I wanted to go. So I think that that's something that is very, very important. David, do you have any
That's awesome.
insights on
Thank you
that?
for that. Yeah, well, I mean, I was just talking about one thing I'll just wrap things up about is that really do your research because this is a big decision. Okay.
Yeah.
If you make the wrong decision, this is going to cost you like 20 bucks. I'm not going back to that restaurant anymore. It could be a significant challenge. So research the area that you want to go to. If you live in the area, you research the schools, research how much taxes you pay and what that money is used for. When you look at a tax bill, it'll break down all the money and where it goes to dollar by dollar. Don't look at Chicago's because it's pretty sad. There's this crazy amount of money that just goes into things where they're like billions of dollars behind. But that's why you want to look at where you're going. What does that give you? In some states, you may buy a 500,000 dollar property and taxes are 1,700 a year. You buy the same property in Lake County for 500,000, you're paying about $15,000 in taxes. So know what you're getting. The
Yeah.
other part, when you're doing research and you're, let's say, a veteran, and you have a service connected disability, what does that give you? Some states don't give you any property tax, don't give you nothing. Others will give you, like Illinois, at 70%. Most states are 100% permanent in total. So you're just really educating yourself on that process, what that looks like. I think is really like our closing thoughts because, you know, when we talk with people, we always bring up things they're like, oh, I didn't think about that. And that's who you want to have a discussion with, not
Yeah.
everything they've told me I already know. Most people wouldn't be like that, but you want someone to come in and introduce concepts to you. You're like, wait, I didn't think about that. That is a great point. Maybe I should be looking at it from this angle. No one should be, no one should be selling like a used car badger. Like they shouldn't be like, well, you need to do this, you need to do that, right? You have to come with the hat of I'm an investor, or I'm doing this for my family, right? Or I'm doing this for myself. Which hat are you wearing when you're trying to accomplish this, right? Coming in as an investor, buying a multifamily is a very different objective than I'm trying to buy a single family home with 5 acres of land in the countryside, or I'm looking to buy and live in a condo because I don't want any maintenance. Three very different buyers, three very different mindsets.
Yeah.
And we all change where we're at in that, right? That's why people buy multiple properties. So do the research on where you want to be. Reach out to us if you have questions. We can connect you with anyone across the country. Lourdes, as usual, amazing, full of good information. Make sure you guys hit the like and subscribe button and catch more content like this. And then we'll catch you guys soon. So thanks again for everyone that joined us.